back on Morning Movers. Adobe in the spotlight after the close when the company reports second quarter earnings. Analysts are expecting adjusted EPS to come in at $5.17 a share with revenue to come in at $5.9 billion. Adobe bulls certainly need some good news. That stock down 21% this year, nearly 40% over the last 12 months. Really rough ride there. Time now for Options Corner. Joining us to take a deeper look at Adobe, we've got Rick Ducat, lead market technician. All right, Rick, let's talk about this chart. It's been really rough for Adobe.
Software has not been the strongest sector in the S&P technology area here. It's all kind of thrown off by Palantir, you know, and Adobe has been at the forefront of kind of the software as a subscription service here. So something people don't enjoy very much in general, but down almost 40% on the year or so. And if we were to look at our candle chart more closely, we could see that Adobe has seen a long slide downward since we saw that earnings event on December 11th last time. The general shape would be more of this descending triangle type pattern here, where we have a downward sloping trend line and a horizontal area. 332 would be a double bottom area of support. That's about where we just hit during the past few sessions. Now it's become a triple bottom type area here. So we can see now that we're looking for a push above that boundary that we would see for our trend line there. So if we were to consider more about our other studies here, volume profile and standard deviation channels, we'll just stay on this chart for one moment here. See, the RSI has been broken. Our green line at the bottom there has been interrupted, but we are still close to that 50 midline. We can also see price hanging out below our moving averages and below our trend line there. So it's pretty much deteriorated ever since that earnings event here. If we could scroll to our next chart now, we can see that the volume profile and standard deviation channel studies show that we are in the thick of the last significant volume node on the chart before we start to get back to those lows near 332. This is the heavy volume area where the bulls need to really make a stand. Otherwise, it could be a difficult situation. If we could push to our last chart in our grid today, we can see that the expected move for the monthly series here is between those two orange lines, about a move of plus minus 3.6% or so. So that would be the general range, not too terribly far beyond the recent highs and lows that we've seen in this stock.
Okay. All right. Thank you, Rick, for a look at the charts and recent activity in Adobe. Now, to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom. So how would you set up an example trade, given that we've got earnings from Adobe due after the close today?
Yeah, I think one of the key takeaways from Rick's charts were that 330 level that it's based out a couple times over the last 6 months. You got to take that into consideration. Option market's pricing in about a plus or minus 9% move either way in the shares. That's over $32 either way on a one standard deviation, a one-day move, and the expiration is tomorrow. So take that into consideration. Implied volatility levels really elevated in this name. IV percentile ranks at 100%, so we're at the highest level in implied volatility for Adobe over the last 52 weeks. So that provides some opportunities if you want to use certain strategies that take advantage of that higher implied volatility. So I looked at one that does, and I looked at a short put vertical here in the September 12th weekly cycle that expires in just one day. Really short-term positioning. We're going to sell that 330 strike put. That's been a good base of support over the last several months. And then against it, because we want to stay risk defined. For the last 4 earnings reports out of Adobe, the stock has sold off sharply. So we got to take that into consideration. But we're also at levels where we've based out. So selling the 330 put, buying the 320 put, short $10 wide, neutral to bullish put vertical. You're going to collect roughly, if the stock opens up here around $355, you're going to collect roughly about a $250 credit. That's what you can make on this trade, $250 per spread with $750 in risk. But it takes your break even all the way down to $327.50 to the downside. That's about 8% below the current share price where the stock's going to open up here around $355. So about that one standard deviation. So you look for that support around the 330 level. You profit in 3 out of 4 scenarios on this one. If the stock goes higher, stays where it is. Or you're wrong and it goes lower but stays above 330 you're going to be profitable on this high probability of trade, where you've got a probability of finishing out of the money on that 330 strike, which is what you want, of about 70%.
Okay, all right. Thank you, Tom. That's an example trade there for Adobe. It's got earnings due after the bell today.